Hey guys, how's everyone? Can everyone hear me clearly? Can everyone see me? Right? Okay. Can everyone hear me and see me? All right. Nice. We got guy here is called best friend, right? Reveal yourself, best friend. Okay. Hey, nice to see you, Mark, Leandro, Jamilu. We got Bleach, Donald, Julio, Mark. Oh, Mark, sorry. Yep. Fabio, Alan, Yen Shang, Imad, Bob, Diane. Nice to see you guys, man. Loud and clear. That's good. That's good. Good stuff, man. Neil, nice to see you. Rohan, nice to see you again. Robin, nice to see you here. All tuning in on time. Kanamba, nice to see you here. Right. Simon, Azam, yes, from KL again. Right. We all know you're from KL. Right. Beyond from Norway, right? Nope, not. Was it from Norway? Shucks. Or was it from Netherlands? Could have been from Netherlands. I forgot. Right. Yeah, nice to see you, Beyond. Right. Chongshen, nice to see you. Graham, nice to see you too, man. Antonio, right? Shamsul, nice to see you. Okay. Uh, Azam says he can't see me and my slides. Can you guys see me and my slides by any chance? Right, Julia, I'm doing well. Right, thanks for asking. Only you, no slides. Oh shit. All right. Screen sharing is paused. All right. How about now? Can you guys see my slides now? Okay, awesome stuff. Okay. Yeah, it's uh, maybe I don't have enough sleep or something. I tend to be making all these mistakes these days, right? All right. Thanks for letting me know. Hey, Desiree, nice to see you tune in here. All right. This time you're not late. Good stuff. Right. Michael, nice to see you tune in. Right. Okay. All right. Osama, nice to see you. Today, today's session, right, is gonna be on chart patterns. It's gonna be on reversal chart patterns. Next week we're going to do continuation patterns, right? And next week might be the week where we're going to YouTube live for our Tuesday sessions. I'll keep you guys updated on that, right? I think we are exploring a couple of options like YouTube live, Facebook live, all of it together, right? So that you guys are at least able to talk to each other versus like I can see all you guys talking now. Just say because in the question section you can't see each other's messages, right? So that's where we kind of hang out in the VIP room and stuff. Taha, thank you. Thank you very much. Thank you very much. All right. So yeah, today we're gonna focus a little bit more on chart patterns, right? I have a very strict way of using chart patterns, right? So I kind of use it not just purely as chart patterns, but I use a couple of other confirmations to increase the probability of chart patterns playing out properly. Because mostly chart patterns, yeah, mostly chart patterns a is it's slightly trickier. It's slightly trickier, right? You need a lot of confirmations, and with throwing Fibonacci, that's where you can actually get some pretty good chart pattern probability of chart patterns. Okay. Now, okay, let's begin today's session. Let's begin today's session. It's gonna be an exciting session, right? A whole bunch of you guys tuning in. That's nice, right? I'll touch on a couple of reminders again later in a minute, right? Just want to go through the beginning. Okay. Now, disclaimer as usual. I keep forgetting this. Right. Remember that anything in this webinar is purely educational in nature, so should not be construed as investment or trading advice. So please do your own due diligence before you trade. Right. Trading CFDs can be dangerous. So yeah, guys, you know the drill. Stay safe, trade safe, exercise proper risk management. Right. Whoa, money flow index. I will need to research into that, Azam. Let me check that out. Sounds a little bit to do with volume and stuff, right? Check it out. Okay. All right. So today I'm going to touch on a couple of things, right? Mainly what are chart patterns, right? The top three reversal chart patterns. I wouldn't really call it reversal, but yeah, the reversal at the top of a trend kind of thing, right? Top three reversal chart patterns and incorporating them into a trading strategy, which is the most important part because you can read out about all these different chart patterns, but if you don't know how to incorporate them into your trading strategy, it'll be all for nothing, right? So as here in the IC Markets webinar, we put a lot of emphasis on not only education but also practical application, right? Where we put it into trading. Okay. Now, I see questions asking. Asking about Fibonacci, asking about support and resistance, asking about all this different stuff, right? How do you get access to it? Where can you read up about it? How can you learn it? How can you practice it? All right, let me just share my I'm just gonna take this moment to share with you guys really quickly, over here, right? So YouTube IC Markets rather. So this is the first link that you want to go to. YouTube IC Markets. We got live analysis session tomorrow. Me and Cass, also known as Bob, right? Doing the session tomorrow, right? Live market analysis is very fun. I'm gonna share the link with you guys. So go bookmark this link for tomorrow. Same time, same place. Well, not same time, different place. Basically, YouTube Live. Go tune in then. It'll be a fun session. Looking out for some awesome trades together, right? So go check it out. Now the playlist, one point you guys to a couple of playlists, right? First is this playlist over here is the IC Markets webinar. Everything that we taught is placed into here. Start. I Who was the one who mentioned that they're going to help me arrange the webinars, right? I forgot, right? But if you want to help me arrange it, yeah, you're more than welcome to, right? I need to move some stuff like trading Biden and stuff like that. I need to move it away, right? But yeah, I need to rearrange them a bit. But generally, starting from the bottom is a safe bet, right? Starting from the bottom and working your way all the way to the top, right, will help you get a hang of all that you need to learn in to be a good trader, right? So yeah, this is the first thing that you can take note of. Second thing that you can take note of, right? It's a pretty useful playlist. So what I like about this playlist when you tune in here is that this basically shows us analyzing charts in real time. The great thing about analyzing charts in real time is that you can see the thought process we go through as we draw the levels, draw the trend lines, draw the support resistance, the Fibonacci, retracements, extensions, everything. You know, it shows you the thought process, which is very important because you're reading all these things, you're learning all these things, but when it comes to applying, right? When it comes to applying and you're looking at the charts, you're like, damn, right? Where do I start, right? The best way is to actually come in, watch the previous webinars that we did, not only those educational ones, but look at the ones where we analyze and get an idea on how we actually break down the markets, okay? Two very, very important, three very, very important links that you need to take note of. If you want to find out the, look for the upcoming webinars, this is the page that you should go to, right? Over here, this is the page that you should go to check out upcoming webinars, right? We got Cassandra touching on the Bahasa webinar tomorrow, right? So if you can go and support her, right? I think I'll send a link to you guys. Only if you support Bahasa, only if you speak Bahasa, right? So yeah, go check it out if you want to tune into our webinar tomorrow, all right? Okay, now last but not least, the last thing I kind of want to touch on. The last thing I want to touch on, the IC VIP room, right? This is the place you want to go to practice your analysis, all right? I want to give a special shout out to Moemar Dulbik. I'm not sure if he's in here today, right? I think, yeah, he passed his funded trader program, right? So, we're all congratulating him, right? And it's not the first one. A couple of you guys have already passed the test, right? And I encourage you guys to share your testimonials here, right? And that is what I want to share with you guys, is that you don't need 30 years learning, right? Or being on Bloomberg, being a hedge fund portfolio manager, going for CFA, CMTs. You don't need that, right? Instead, you can just spend 30 days. Moemar, I've been seeing his progress over time, very, very diligently, tuning into webinars, right? Nick, I think you can see yourself here somewhere over here. Nick is always in the room. Nice to see you tune in, right? Yeah, it's just need to tune in to the VIP room, practice your analysis, right? We'll correct you as much as possible, right? And that will help you become a better trader. Some of the strategies I taught you guys, especially the scalping ones with the Nike Tick Fibonacci extension strategies, very, very effective. The hit rate is 70, 80, sometimes even 90%, right? Especially for scalping setups, right? Go check it out. All right, you can be a really good trader over here. All you need is the proper guidance, and IC Markets will provide you that guidance. Okay, so if you can, what I recommend you to do, tune into here, right? Go sign up for an account, right? It's all you need is an IC Markets account. Okay, all you need is an IC Markets account. $1,000, $10,000, or $100,000 to give you different tiers, all right? Different access levels, right? So go check it out. Okay, Adam, if you want to learn about the Nike Tick strategy, I recommend you to watch the Fibonacci series. in the YouTube that I sent over, right? The Fibonacci series 1/4, 2/4, 3/4, 4/4, right? No problem, man. Right, but yeah, it's a Fibonacci extension playing the trade of the 127 retrace extension back to the 100%. Okay, Utam, nice for you. Utam, nice for you to tune in, right? At Garas, it's been a while, man. It's been a while, right? No worry, Calvin. Nice to see you tuning here. But yeah, guys, just tune in here, right? And if you're new here for the first time, let me know. Send in the comment section. I'd like to welcome you, right? One thing I do want to encourage you guys, right, is that in the trading room, if you can, just come in here and let me I kind of want to show you guys this setup which we are kind of looking at, right? Oh, hey, Robert, nice to see you. Kishore, nice to see you. Right, one thing you want to do in the trading room is to practice your analysis, right? So you can just as easily draw this trend line, and you can say, I'm just going to highlight these things for you, like guys. Since Vico already highlighted this, I will leave this out. Let me see if Aussie. No one highlighted Aussie Yen yet. All right, so for Aussie Yen, in this case, I might be considering this particular move, right? This trend line might be breaking out. I say trend line breakout here, or potential trend line breakout here. Okay, when I highlight this, I can actually click this button called link object to text. All right, and I can then click on this, right, to link it to this trend line. And when I send the message through, anyone who wants to know what I'm referring to this trend line, they can hover the mouse over it and they can see it light up. All right, so this is very important in helping us understand exactly what you're referring to when you're doing your analysis, and that'll help me correct you guys to see if you're a better trader. Kelvin, Kelvin's over here. They posted this analysis on Aussie Yen. Let's take a look. Right, price bouncing off trend line, reacting off 50% Fibonacci, retracement, key support at this level. That's correct. It's a very nice level. Price hits upwards. Then 78.6% Fibonacci projection up here. A Fibonacci extension. This is Fibonacci expansion. I think it's not Fibonacci extension, right? Fibonacci expansion, right? You might have took it the wrong way. Oh, this is extension, correct? This is expansion. You're correct. Sorry, my bad. My my brain stopped functioning for a while. My bad. Right. Okay. Yeah, Shamsu, I'll teach you guys a little bit more. Okay. So Kelvin, you don't play the move up from here, right? A few considerations to take note of, right? I think it's not only the 50%. You can consider this level. This is also the 61.8. Yeah, 61.8 projection. 61.8 projection. Oh shucks, I might have clicked on something to try to attach a file. Okay, ignore that. Yeah, I was typing something. I was typing a little bit too fast. But do take note of the 61.8 projection over here. Okay, for you to take note of. Right, I do think if I play the bounce, I probably wouldn't play it. Beyond this level, right? Because playing it all the way up to the higher level up there is a little bit risky. Okay, yeah, so that's a consideration. Yeah, I wouldn't play all the way up to here. Maybe up to here first initially. Okay, but let's not touch on that now. I'll touch on that later in the live market analysis tomorrow. What we want to look at, right? What we want to look at is we want to look at chart patterns. Okay, chart patterns today. Okay, my favorite, right? So before I begin, right? Shamsu IC Markets accounts are not available on TradingView. Laszlo, nice to see you first time here. Welcome to the show, right? Luca is okay, man, right? Sajat is the 4-hour time frame, right? And anyway, for those of you guys who are here for the first time, let me introduce myself really quickly, right? This is your boy Desmond Leong, right? External analyst here at IC Market. So I run the award-winning research firm Everest Fortune Group, also the Forex Army, right? So we're finalists for 2019, 2020, 2021. Best FX Research 2021 for Best Equity Research. We work with the institutions on telling them where the markets are heading, but we have a special partnership with IC Markets where we are bringing you guys the good stuff, the juicy stuff, the stuff that will take your trading to the next level, right? So you just need to watch the webinars, practice, we will guide you. And with enough practice, you have seen the testimonials that come in, people that went from 40 to 60% hit rate, 60 to 80% hit rate, unprofitable to profitable, right? With the correct kind of guidance that we have provided, you can become a better trader. Okay, just ask a couple of the people, right? Maybe in tomorrow's YouTube session you'll be able to see them. But yeah, they're much they're really good trading. They're really good traders now. All right. If you want to find some of my trading tools, especially a trade manager, which I recommend, go over to forexarmy.com, right? And if you want to follow me on Instagram, check me out, Comfy Desmond. I'll try to post a little bit more. You guys have been asking me to post a little bit more, right? I'll try to post a little bit more. But yeah, so this is the gist of it, right? Azam, I don't think they will be integrating that soon, right? For reasons I'm not too sure either, right? I think I'm not too sure why, but yeah, they are not having integration yet. Okay, so no news on that front. So what? Not sorry. What trend line? Sorry, I missed that part. Yeah, over here, right? Over here. Okay, let me see. Yes. The first thing I'm going to talk about, right? The first thing I'm going to talk about are the double top strategies. Okay, double top reversal. So let me pull up my handy pen. I'm just going to need to draw a lot of this today. Okay, can you guys see? Okay, the first thing, so firstly, let's talk about chart patterns. Okay, chart patterns are basically, there are many different kind of chart patterns out there. There's some time tested ones like the double top, double bottom, head and shoulders, triple top, triple bottom, triangles, wedges. Some of it borrows its logic from Elliott wave, like continuation patterns are like triangles, right? And then it actually is a potential wave 4, right? In a like when if you in Elliott wave you got 1, 2, 3, 4, and then 5, right? So this 4 tends to be a triangle pattern, right? So people think that, oh, it's a triangle pattern, and then it continues, right? So actually it borrows its logic, right? It borrows its foundation from Elliott wave. I don't want to dive too much into that, but they all have their reasons on why they work out, right? Triangles, for example, are actually just when prices are being squeezed by two trend lines, right? You got one trend line at the top, you got one trend line at the bottom. You're being squeezed by two trend lines until you explode in one direction. Okay, so there are many ways to trade all these different kind of setups. I'm going to teach you some of the better ones, and of course, when it comes to trading chart patterns, there are many arguments against it, right? Like sometimes they don't work that well, and how do we avoid it? How do we avoid getting in when how do we avoid getting tricked, right? On getting in on the trade early, right? When a chart pattern looks like you might see like you see a double top kind of thing, but then when you just when you got in here, it starts to bounce up, right? How do you avoid these things, right? I'm going to touch on it. Touch on erase it all ink. Okay, I'm going to touch on it today. Okay. Now, but if you do have questions, what I want to encourage you guys to do is to send them right through. I literally have another screen open here, just to answer you guys. I'll do my best to answer you guys along the way, because I know that if you know our webinars, traditionally we have we have no time to answer any of the questions, right? So ask them throughout the webinar. If they're relevant, I'll do my best to answer them. Okay, let's begin. All right, so now the double top pattern, right? Is a bearish reversal pattern. So what you need to do, the first thing you need to do is that you need to take note that there's a preceding ascending trend. So the prior trend, it has to be ascending. Okay, the prior trend has to be ascending, and it has to be of a decent size, right? Minimally, the double top, you're looking at 23 to 38% of the entire move, right? What do I mean by that? Is that if this was a double top that we're looking at, okay, if this was a double top, okay, the move that precedes the double top, right, it cannot be this. This cannot be the move preceding the double top, right? So if you're looking at double top over here, right, for a breakout to actually come down here, the preceding move, this is the preceding move. It has to be sizable. It can't be just some tiny move, right? If not, this is just like a normal zigzag pattern. There's nothing much in there, right? There's nothing much in there. I wish I can control Z, but I can't control Z. This is so irritating. Oh yeah, okay. Is that the only way I can? Shamsu, I wouldn't dive too much into Elliott wave yet. impulsive move or corrective move, but the preceding wave, the preceding trend is that it needs to minimally be a ascending ascending trend. When you draw a Fibonacci retracement from here all the way to here, what you're looking for is that minimally you should be looking at 23% to 38% as if this is what we call the neckline, right? The level where you're gonna get a break from. Minimally, you're looking at 23 to 38% because 23 is my personal favorite because in usually in like Elliott theory, without diving too deep into it, right? 23% is the first big level to break before confirming a big move down to 38%, and then even possibly to 50 or 61.8, right? Yes, this is recorded. I think it's usually uploaded towards the end of the week, right? But see, you know, if 23% is broken, right? If 23% broken is, which is the most common thing most of the time, right? Price tends the price target, right? You know, this is 1 times the vertical distance from the top of the peak to the bottom of the throw. So this is a move, right? If this is 23%, right, and it breaks, who knows what is the price target? How many percent is the price target? Anyone want to take a guess? Well, we got Jamilu saying 38. We got Peter Venter saying 78, 100, 61, 78, 23 at bottom, 50, 77. Alan answered 46. That's nice. Distance to the top, 61.8. All right. Many answers coming in, right? Many answers coming in, right? But yeah, so the distance is actually 1 times of the vertical distance, the target. So if this much is 23, then you should have the same amount, 23% down, right? So it should actually ideally be 46% by right. Now we know that in terms of Fibonacci, we got the 23%, we got 38%, we got not really a Fibonacci, but we got 50%, we got 61.8, right? So you notice it goes down close to the 50% level of the breakout, right? So technically, sometimes people say yes, you know, it's the distance. The double top potential is just the top to the bottom, right? And you just multiply the distance, right? It actually, you know, if it really breaks the 22%, you should be seeing something close to the 50%, 46%, 50% take profit. But you're just measuring whatever the distance from here to here, right, should be the profit target from here to here. But my one advice is to look at what the market is telling you. Don't just play, right? Don't just blindly play a vertical distance of the exact same amount. And when you're losing money, you know, you turn to the market and say, but you know, according to technical analysis theory, you should be going all the way down to there, right? If you're not going down to there, you are cheating, right? The market doesn't care. The market doesn't care what you think, okay? The market doesn't care what you think, right? So it's important for us to not only see a profit potential, right? So I'm just going to test you guys a couple of different kind of scenarios over here, okay? Right? How do I erase all ink on slide? Okay, let's just say we got an example here. Let's see. We got this. This. Okay. All right. So let's just say we got this chart pattern. It's a nice preceding move up, correct? Now this is, let's just call it 10 points. This is 10 points. Okay. All the way down to here is another 10 points. This level is maybe this is maybe 7 points. Okay, down to here, this level is 12 points in total. Okay, so you got 7, you got 10, you got 12. If you were to try to play a double top reversal over here, right, where will your profit target be? 7, 10, or 12? 7, 10, or 12? I got different answers pouring in already. Some people say 10.5, 7, 7, 7, 12. Got Andrew. First TP7. 12, 12, 10, 12. Okay. TP1 at this, TP2 at that. Joanna, okay. So, Peter, it's not about having a risk reward of 1:1. That's not the magical number. Okay. But in this case, right, there are a couple of answers to this. You can either close out the trade fully at 1 or no, at 7, because this is a big level. Price might not break past this level. This is a pullback support, right? And if you get the trade in here, you take your first partial profit, then you move your stop loss, you move it to break even. That's the first option. And then you play it all the way down to 10. No reason to play it down to 2, right? No logical theoretical reason to play it down to 2. It's nice to play it further, but technically a double top pattern should just kind of the potential of the head to the pick to the throw is the potential of the take profit. Okay, so that's one consideration. Now the second consideration is that, yeah, you know, if you first take profit here, break even, and then you play down to second one. Second option is that you just take the full take profit over here. There is nothing wrong with having a fixed you know, most people say your risk reward of 1:1 is needed. That is not true. Now let me put some things into perspective. Okay, Simon, yes, I can see your question, right? When you send it through this way, I can see your question, right? Now, okay, so let's put things into perspective. For example, Peter, right? If you had a trade, right? If you had a trade that you are risking 1 and your reward is 10, okay? For every 1 pip stop loss you have, and you have a 10 pip take profit, how many percent of the time must you be correct, you know, to be profitable with this strategy? A wild guess would be fine. Some people say 99%, Fabio. 1 in 9, 1 in 10, 10%, 60 to 70% to 1 in 10 is very, 1 to 10 is very, yeah, I'm just saying 1 to 10 is very rare, but I'm just trying to share a different perspective here. If 1:10, right, you only need to get 1 trade right, and you can get the next 10 trades, you can get it wrong. The next 10 trades you can get wrong, and you still would be break even. You'll still be break even. Okay? Now, of course, we can reduce this, right? If we do it 1:5, for example, 1:5, you can get 1 trade right and you can get 5 trade wrong, and you still may break even. Okay? That means your hit rate is about, in this case, the bare minimum hit rate is 10% of the time. Bare minimum hit rate is here is 20% of the time. So out of 10 trades you take, 2 must be correct. 1:1, right? You need, for every 1 correct you get, you know, it will get negated if you lose out 1. So you need a hit rate of minimally 50%. Now, sometimes people tend to get a little bit caught up. I wouldn't say, you know, they pay a little bit too much emphasis on the risk reward ratio, right? Technically, 1:1 is okay. It's a nice number to have, but 1:1 is only important if your hit rate is about 50%. Right, and many times my hit rate is 80%. So even if I have a risk reward of 1:0.9 or 1:0.8, it is still okay, because my hit rate is way higher than the minimum requirement of 50%. 1:2 is okay, 1:3 is okay, right? You usually play from one resistance to one support to one resistance, right? As long as you exercise proper risk management, right? And know that what is your hit rate? If I had a 20% hit rate, right? If I had a 20% hit rate, I would gladly take trades that are 1:10. If I have a 99% hit rate, right? Guys, if you have a 99% hit rate, that means, you have this strategy that almost 99% of the time it makes money, right? You're going to look at strategies like, maybe even if this was like 10, you're risking 10 pips for 5 pips, right? If you had a 99% hit rate strategy, you're going to go for it, right? You're like, yeah, I don't mind because I have a very, very high hit rate. So that's the thing. Hit rate, no, risk to reward is very tightly correlated with hit rate. So you gotta see both sides of the coin, not just the risk to reward of a trade, but your setup. How probable and how accurate is it when you see a particular setup? Okay. Now, I Edgara, yes, I will do that when I have the time, right? Starting to have a little bit of time now. Maybe when the baby comes, who knows, right? So Julio, I recommend the Nike tick formation, but today I'm going to talk about chart patterns and how you can use it to actually improve your trading. Now, okay, so a double top, right? You notice that the distance from the peak to the throw is the distance you're looking at over here, the price target. So that's minimally what you're looking for. Okay, that's minimally what you are looking for. When it comes to taking profit, remember, try to take some along the way, right? So if it breaks this level and it goes down, it might be worth taking some over here, for example, right? Not sure at how many percent, but it might be worth taking some profits along the way. Okay, there's completely nothing wrong with that. A clearer pattern would be this double bottom pattern, which is also a reversal pattern for you to take note of. Okay, same thing, you notice that the distance from here down to here minimally should be at least, I think if not wrong, this is about 38%, high 38%, right? And when price breaks this level, it makes a push up to here. So the preceding trend must be nice and big. That's the important thing. It cannot be some small, tiny descending trend line that you're going to take. It needs to have a pretty nice preceding trend. Okay. Now in this case, right, not only does it form the double top, double bottom for you to do a reversal, right? If it breaks a key Fibonacci retracement, it gives it a higher chance for it to kind of break and make a push up towards the target. Okay, that's the first important note. Another important note, right, is that you try to see what other charting strategies give you hints that there's a nice breakout. For example, over here, you could just as well draw a very nice trend line, a descending trend line like this. So if it broke out from here and at the same time it broke out like the trend line, right, it has an even higher probability of price breaking out, right? If there was divergence, you'll be even more, right? If there's a breakout, there's even more, right? If there's a chart pattern over here, right, that's maybe like the 3 white soldiers, there's an even higher chance that it might break out because that's a continuation price action candlestick pattern, right? So different things kind of all line up together to increase and decrease the probability of a chart pattern kind of working out. So it's never as simple as kind of just looking at a chart and like, yeah, there's a double bottom, it's gonna work out for sure, right? That's not the case. Sometimes it might be faking you out, and in those cases, right, what you want to do is to search for as much additional confirmation as you can get before you take the trade. Okay, sorry, just drinking some green tea. Now, so okay, in this case, right, one of the things I want to highlight here is that risk area was over here. You notice how price actually came up, touched this risk area and dropped down. So that's an important thing to take note of too when you're taking a trade. So this could be your first maybe partial profit or break even. It could also be your entry, right? Because usually when price breaks out, it doesn't break out too fast in one direction and just take off, right? Usually there's a small little pullback. The pullback could be for a couple of different reasons. If you look carefully, it was close to a 100%, projection. It was close to 100% projection. Okay, it was close to a Nike tick, 127% extension. Okay, so they both line up together, plus this pullback resistance. There's a reason why price shoot up and then do a small little reversal first, right? So that's a dangerous thing when playing, right? There are these risk areas that you definitely need to take note of. It's usually decent levels where you can take partial profit, right? Don't ever get married to a trade thinking that just because you called the trade, it's going to work out. No one ever promised you that. No one ever promised you that just because you have seen the double bottom, right? The next time you see it, it's going to make you money. No one ever promised you that, right? So we need to access the market and what they're telling us, and don't get blinded by that. The idea that I have found the double bottom strategy is going to work out for me. It's going to break the, whether call it neckline or whatever it is, it's going to break there and it's going to rise up to my price target. We should never ever assume that, right? We should always see what the market is telling us, right? Sure, it might go up, but there is a pullback resistance. There's a 127 extension. There's a 100%, 100% projection. All of it lining up nicely. So price might go up. This, I will move my stop loss to break even, maybe about here. Take partial profit and maybe see if I can make a push all the way up to there. You need to manage your risk along the way, especially chart patterns, right? Remember, if there's one thing in chart patterns is that don't just trade on a chart pattern by itself. I believe people did a blind test or something, and if you trade purely based on chart patterns by itself, you end up losing quite a sizable amount of money, right? So the trick is always to complement and supplement that with other forms of technical analysis, which I'm going to teach on. One of the biggest things which I showed you is not only support and resistance, not only Fibonacci, but also maybe this too. Yeah, sorry, Fibonacci. Okay. Now, I hope I didn't lose you guys. I was going on quite fast over there. If you have questions, please send it through. I'm going to pause for 10 seconds for you to send through any questions while I eat my. Okay, guys, I'm back. All right, I'm going to move on to the next one. Okay, maybe it looks like some examples later. So Desri is asking about chart patterns like the time frame. In this example, we're using the H1 time frame. H1 time frame. Okay. Personally, I think H1 is fine. I think H1 is fine. I will try not to go below H1 when looking at chart patterns. The higher the time frame, usually it is slightly better. Saleh, we won't be able to see the charts yet because I pre-prepared these charts beforehand so that I can show you the ideal examples. If we have time later, I might be able to show you some live charts, right, and look for patterns over there. But as it stands right now, we got a couple of chart patterns to look through that on the PowerPoint slides, right? Berlia Nagara says that is asking, is it right that the double bottom always occurs in demand area? Yes. I mean, there's a reason why it's a double bottom, right? So I mean, there it usually doesn't bounce. So usually you try to trade the confirmation of the double bottom. You don't try to trade the idea that it's going to form a double bottom to reverse, right? Sometimes it might just reverse all the way. It might just go all the way without making another double bottom, right? The reason why it's a double bottom is because the bears jump in thinking not wanting to give the bulls a full run, easy run that takes it all the way up. It takes it down, but it loses out before being pushed back up. That's why it's a bullish kind of strategy. So Imad, the one main rule for double top and double bottoms, right, is that try to keep the height of the bottoms and the heights of the tops. Oh, sorry. Height of the bottoms and the height of the tops, you should try to keep them as close as possible, right? This is not that nice a double top, right? Because of this movement over here. However, for double bottom, this is a very, very clear movement, right? This is a very clear movement, and it helps to filter out the quality of a double bottom. You just need to see, especially when it comes to chart patterns, you need to be very strict. You need to be super strict, okay? The gaps between the top and the bottom, not sure which one you're referring to. Okay, so Gaius is asking, how do you trade the double bottom when it happens, right? It's the same as any chart patterns. You trade on the breakout, right? You trade on the breakout. So I'm going to erase this thing here, right? Okay, so you trade on the breakout. What does it mean on you trade on the breakout? Okay, you might answer that in a bit, right? So when price actually closes above the double bottom neckline, that is where you can. That's the first option to get in. The second option is to wait for a price to make a retracement before getting in at a cheaper price to play the move up, right? So those are two ways where you can play the double bottom. Okay, the distance, there's no hard and fast rule, but don't, we should not be seeing a double bottom like that, right? We should not be seeing a double bottom like that, right? It should be relatively close to each other, right? No hard and fast rule with the time, how many bars kind of thing, but just eyeballing it, it should be relatively close, right? Fabio is asking a good question. Do I look at the break of the previous movement or do I look at candlestick pattern? I actually look at combination of both, right? So in this case, right, you break the pattern over here, right? Maybe you broke a Fibonacci retracement from up here to down here. Maybe at the same time, right? You know, where is it? There's, in terms of chart patterns, a 3 white soldier pattern, which is a very bullish signal, right? So sometimes when you're looking at confirmation of double bottoms, double tops, triple bottoms, triple tops, right? The trick is in combining as many of the correlated pairs as possible, right? To see whether you really have an accurate breakout. Okay. Now I'm going to leave 1 second for any other questions. Okay, got it. Back. Jules is asking which time frames are good for double bottoms and double tops. I would recommend minimally the H1 chart. My personal favorite is H4 chart. There's enough people looking at it to actually let it work out nicely, right? So this case, for example, is dollar CAD. Now 3%, there's a way to calculate that. I'll see if I got time to explain it later. Simon, yes, it does too. Slightly less, but yes, it does. Okay. Anything that breaks the 20 to 30% of a big move does trigger the rest of the move down. Okay. All right. Looking at some questions that have came through. Okay, let me. Ronan, I see you said it's 100% expansion. Not sure which one you're referring to. Okay. All right. Oh, after the breakout. Not sure 100%. Maybe 100 from here to here, down to here, up to here. Maybe. I'm not sure if that was the one you're referring to. But now let's look at the head and shoulders pattern, right? So a head and shoulders pattern, right? Importantly, beforehand is that you must have a nice big preceding move. Yes, it needs to be a nice big preceding move. So remember, guys, when it comes to head and shoulder, right? You don't want to draw dwarfs. Okay, you don't want to draw a guy with this is his shoulders. Imagine nice little shoulders over here, right? You got a nice little head over here, right? You don't want to draw a guy whose body proportion is like this, right? And this is his shoes. I'm not bad at drawing. This is his shoes, right? And these are his hands over here. Oh my god, looks like a scarecrow. Looks like I'm drawing a scarecrow, man. Shit. Right? Yeah, but yeah, don't want to be drawing a dwarf, all right? This looks like a dwarf, right? What do you want to be drawing, right? Yeah, it's true, guys. You know, what you want to be drawing is I keep erasing wrong one. What you want to draw is, you know, you got a nice head over here, right? Got a nice shoulder over here, right? And this is the neckline. You want a proper guy, right? A proper, need a nice guy, you know, with nice long pants, right? Nice long pants, it's a nice shirt and stuff, right? You got nice legs over here. Oh man, this guy looks like he got stuck in a trash can. I'm sorry, my drawings are terrible. Yeah, it looks like this guy got stuck in a trash can, right? It's freaking terrible. All right, but yeah, you know, when you draw a head and shoulders, make sure the preceding move, you know, is relatively large enough that it justifies the head and shoulders. Right? Oh, yeah, it could be a robot. You know, what's the one on? Is it R2D2 or some shit, right? It looks like R2D2, right? Could be SpongeBob, yeah. Right. So yeah, guys, this is um that's the thing when it comes to head and shoulders, right? Remember, we are normal human beings. Our head and shoulders is relative, right, to our body size. And that's the important thing we need to consider when we're looking at head and shoulder pattern. The preceding move up here needs to be relatively big enough for the head and shoulder pattern to look, you know, to not look out of proportion. Okay. Okay. I hope you guys got a part. So definitely, when you're looking at, you know, looking at me, the head and shoulders, the head needs to be taller than the shoulders. Okay, the head needs to be taller than the shoulders. The shoulders, ideally, you want them at roughly the same height. You don't want the right shoulder slightly, you know, too far down. You don't want the left shoulder too far down. You don't want it to be that way. Okay, that guy maybe has something, a slip disc or something. You know, his back might not be feeling too well and it's bending sideways. But you know, you roughly want the height of the left shoulder and height of the right shoulder to be roughly the same. It doesn't need to be exactly the same. Roughly the same is okay. All right. There is this special rule that we have. There's this special rule that we have that the second shoulder, the first shoulder, the left shoulder that is formed should not go below the trend line that is being drawn. You know, to the trend line that is drawn for the preceding move, right? The body. There's a special rule that it has over there that, you know, if it stays to the rule, it's actually pretty good, right? It's actually pretty good. There's it. Highest point of the arm trend and low of the decline remains above the trend line. So this is the trend line. The low of this decline is usually above this trend line. Not many people know about this rule, but it's a pretty good rule to have, right? The profit potential is the distance from the head all the way to a neckline, and where the breakout level is. What you will usually notice is that price does tend to make a little bit of a pullback to here before dropping quite strongly, right? This happens pretty often. Berlin Agara, I have to answer that later, right? Big head is not necessarily better, right? Proportionate head is the most important, right? So we can't, it's the same thing like over here, you can't have a head that goes this super duper big, right? That might be, that looks like Patrick the starfish, right? It could be Mojo Jojo or something, right? Something where, you know, the head is a little bit too big, but you don't want it to be too big. You want it to be proportionate. Just look at yourself. You kind of want it to be that way, right? You don't want it to be too massive. Okay. Yeah. So that's the thing to take note of. And of course, when it is breaking, right? When it is breaking, of course, a key thing to take note of, right? When it's breaking, you know, it's essentially breaking this head and shoulders pattern over here. Okay, if it happened to coincide with a retracement from here up to here, right, and it happens to be a 23% or 38%, that's even better. Okay, because it triggers this and it should trigger the next move down to the next key support, right? Even though we can play the full price target, you know, from the head all the way down here, from here down to here, right? Sometimes it just makes sense to maybe play to the next big overlap, like over here. This could be one big overlap to play to. You don't need to catch the whole big Hollywood move every single time. Okay, guys? I hope that part kind of clarified it for you. Simon, yeah, I guess, yeah, you know, the head is about like slightly more than shoulder by about 50%, right? No hard and fast rule there, just that, you know, the head needs to be taller than the shoulder. Because even if that's not the case, the next thing that you can look at, right, which is pretty accurate, is actually okay. This is the inverse head and shoulders. So that's the next thing, is that, you know, head and shoulders patterns, inverse head and shoulders patterns don't require don't require the neckline to be purely straight. There can be a little bit of bending here and there, like you see in this case, right? There's nice descending trend line, right? This is below the trend line, which is very important. It bounces on top and we expect it to go up. It's recovering pretty nicely, right? But what you notice is that the trend line is like this. This is the trend line. It's not just completely flat. You know, you can have trend lines that are designed this way, but you can have trend lines which is like that. You can have necklines which are like that, but you can't have necklines like that. Okay. Emmanuel, I think IC Markets actually uploads it, so it takes a couple of days to upload it, usually by the end of the week, until it gets uploaded. But no worries, man. Yeah, it ultimately usually gets uploaded. All right. So this is the concept of the head and inverse head and shoulder pattern reversal. Personally, for me, I kind of like the inverse head and shoulder pattern reversal, right? The same thing stands true, right? When it comes to playing for profit potential, for example, right? If you're playing for profit potential over here, yeah, if you're playing for profit potential over here, instead of calling the move all the way from here down to here, it might make sense. It might make sense, you know, to kind of see how far down this Fibonacci extension is, right? And maybe play to that level instead, right? And maybe you do a Fibonacci retracement from here all the way up to here, and you get a retracement down. See where they might all line up together, right? And maybe play the move to then say, don't exactly need to play the move all the way, okay? Or maybe take a look at that later. Joanna's asking, why can't you have the third neckline? Oh, because when it comes to reversal patterns, right? Reversal patterns, especially bottom reversal, right? You kind of want to show weakening, right? You kind of want to show weakening before price taking off. In this case, right? In this case, if you use the third one here, so Joanna's asking, why can't we use this? What you're going to see is like that, price like that, like that. So it kind of looks slightly different from a how to say, like a head and shoulders pattern. It's just kind of different, right? It doesn't work that well, right? The same way why we can only draw descending resistance like that, we can't draw resistance above price, right? You know, you're usually looking for a little bit of the squeeze, and that can be given to you with this line and the descending resistance line. Okay. All right, so I hope this part clarifies it for you guys. The inverse head and shoulders, right? And then you can see the profit potential is also the same. Very, very nice. The last thing we want to kind of look at, right? The last thing we kind of want to look at is the triple top pattern, triple top and triple bottom, right? Yeah, so this seems more like a channel, right? You know, they tend to all react around the same level, right? And very nicely, you know, if it happens to not only break the triple top, but also break ascending support, right? Break a Fibonacci retracement. You can see how this move came all the way back from here, right? It's holding up all the way, right? If you break here, you know, we can actually expect prices to go all the way down there, which it has done pretty nicely. You know, it break and it's went all the way down. Pretty awesome stuff, right? But this is how it goes, right? Usually try to look for additional confirmations, especially when trying to incorporate it into a trading strategy. All right, so let me see if I can find some examples, real life examples for you, real life examples for you guys. Right, where's my charts? Yes, Bob, they work. Just that you need to use them. You need to combine them with the right indicators. Okay, so let's just take a look at, you know, just let me, how's it cat? So okay, in this case, let me see if it lines up. I think it's over here. There you go. See, this is not the best, but yeah, this is something like a double top kind of pattern. It lines up nicely with the 38% retracement. So if it breaks the 38% retracement, right, that's where it can drop quite nicely. Okay, just trying to eyeball a couple of examples over here, right? This could be a little bit of an inverse head and shoulders pattern, right? Inverse head and shoulders pattern, right? You notice that it did coincide with a break of the 38% very nicely, right? Many times it tried to test the 38%, it failed, but when it broke, very nicely go up. Like I mentioned, it tends to like to make a little bit of a pull down before going up again. So this is another example of it. Okay, very nice example, right? This I wouldn't really consider a double top kind of reversal. Let me see. I don't think it even went through the 23%. Nah, not even 23%. Okay. Gaia's, right? Whether it's a H4 chart, is a H1 chart, is a daily chart, is a weekly chart, it all kind of just looks the same. There is no difference, okay? Because the charts that you see here, right? I'm going to cover this, right? Whatever time frame I change here, it kind of looks the same. The charts will remain the same, right? Just that it's in terms of the sensitivity, right, and the accuracy. Usually the higher time frames are a little bit more accurate. Adam is saying that Aussie Cat just had a head and shoulders on the H1 chart. Yeah, I guess this is the one you're referring to, right? I think this is the head and shoulders, and yeah, it kind of worked out pretty nicely. Um, is this the one? Yeah, correct. It could be. It could be that one on the H1 here. A head and shoulders. Hard for me to say a head and shoulders though. It looks a little bit deformed. Probably not. Probably wouldn't consider it that. Let's see if there's any big chart patterns coming up. All right, Aussie Frank could have a very, very nice chart pattern over here. This looks like a very nice double top resistance, right? Start from here, go all the way to the top, right? Broke the 23, doesn't really line up with the 38% that nicely, but damn, this is a nice level where price could break out from. But even if it goes down, right, I'll probably only play it down to this level over here, right? So this could be a nice little double top formation for you guys to take note of, right? Let's take a look at Aussie and see if there's anything that really, really jumps out at us right away. Oh, this worked out so nicely. Shit. I Pound Aussie. Pound Aussie over here. Very, very nice double bottom pattern on the 4-hour chart. It could have, I sense that it could have lined up with a very nice 23% retracement over here. So price did make a little bit of a pullback. You can see price made a little of a pullback over here. So technically, right, we could, very well play the move up from here up to here to the 38%, right? The movement from here, the movement 100% actually might be further up, but I do think that, if you don't want to be too crazy, you could just play the move up to 38% would be enough, right? So yeah, reverse hand and shoulder urine. Oh yeah, it's a lot. Okay, I see a lot of people sending me a lot of setups, right? Right. Okay, Desi, I think, yeah. Not sure if I didn't highlight the head and shoulders earlier. I think, right? I think that might be another person, right? But yeah, this is an example of a very, very nice double bottom pattern. We're just trying to look through a couple of them, right? See if I find any others. Something like a cup and handle. Something like a cup and handle. Okay, maybe not. Let's see. Very nice. Pound Kiwi, right? Were we on Pound Aussie just now? Yeah, so Pound Kiwi is also suggesting that we might be seeing a nice little double bottom kind of breakout over here. Price is right about there. I don't think it broke the 23% yet. It hasn't broke the 23%. That's a one big difference and danger of the Pound Kiwi. Pound Aussie has already broke the 23% very nicely. Pound Kiwi has not. So that is a little bit of a danger. If it breaks, not bad, right? If it breaks, not bad. You might be able to get in a pretty nice price. It needs to break the 1272, right? But yeah, this is an example of a nice setup that might be coming up, right? But yeah, there are a lot of these patterns around. You can just scroll around. They'll all kind of just jump out. There's so many of them. This even, right, on silver could have been something like a head and shoulders kind of pattern over there. Head and shoulders pattern broke out, very nice reversal. And I believe it could have broken out with the, no, probably not the 23%. Gold could have the same thing too. Gold is over. Oil, nope. This worked out nicely, but no other big pattern. I guess in terms of the chart patterns, the clearest one right now that we're looking at, not that I'm vouching for it, but pound Aussie does have a pretty nice breakout, right? And I do think we might be seeing price, it's kind of it might just bounce up quite nicely from here. Okay. Sure. Okay, no worries, Azam. Right. I believe trading, the interesting thing with TradingView is that I believe TradingView actually might have a yeah, see, they have all this. Let's look at this, right? Chart pattern double. Is there a chart pattern double bottom? I only see a double top. Let's see how accurate it is. All right. But that's not that nice. That's a shitty double top. Sorry. What the hell is permeable shit? Okay, invert pattern, double bottom. Oh shit, no, this is not a double freaking bottom. Okay, let's go maybe like 80. What the? Oh, this ain't a double top. Okay, nah, it's probably not the best to use it. Yeah, it's hard to find this scanning stuff, right? I usually kind of just prefer if I do it myself, right? So yeah, it's quite funny, right? Stick to your own analysis, trust your own analysis, guys. All right, that's what I'm training you guys to do. Stick to your own analysis, trust your own instinct. Okay. Ampa, welcome to the show. Remember, tune into our VIP portal tomorrow, same time, same place. Live market analysis. I see you guys tuning in, right? I see you guys tuning in. All right, and we have a nice time analyzing the charts together. Okay. Now that's it from me, guys. Right. I hope you had a good time. I hope you learned a lot in today's session. We really covered a lot. Very in-depth session. Thank you, Gaias. Thank you, Donald, Julio, Bob. Right, Mark. No problem, man. Yes, Nick. I'll freaking post more of my good stuff, my secret sauce in the group. Right, a little bit busy now, but I'm trying to get everyone up to speed. Right. Thank you, guys. I see too many names to call, but thank you very much. Right. Still don't know who is best friend. Who names himself best friend? You got to review yourself, right? Right. All right. Thanks, Desiree. Catch you guys tomorrow. Right. I'm gonna get as much sleep as I can. I might not get that much sleep because there's the Champions League match tonight, Man U versus Atletico Madrid. Right. So yeah. All right. All right. See you guys tomorrow, man. Right. Take care. Cheers. Nice one name best. Oh, che. All right. All right. No worries, Angel. Right. Take care. Stay safe. Trade safe. I'll catch you guys in a live market analysis session tomorrow, YouTube live. See you there. Right. Peace out. Right. Take care, guys. Bye bye. See you tomorrow, man. See you tomorrow.